Big money is quietly buying up tons of Bitcoin, while political games are making the market shaky. Are you paying attention to the right signals? With Bitcoin at a make or break point and Ethereum roaring back to life, the next big move could be just around the corner. Are you ready for what's about to happen? In the latest video from Altcoin Daily, the discussion kicks off by explaining Bitcoin's recent price dip. It wasn't random. A key procedural vote for 3 crypto bills just failed in the U.S. House. It's important to know this wasn't the final vote on the bills themselves, but a preliminary step that hit a snag. The failure was partly because some representatives, like Marjorie Taylor Greene, felt the bills didn't do enough to prevent a U.S. central bank digital currency, CBDC. The vote was also tied to defense funding, which complicated the situation. It's interesting to see the sausage-making process of crypto regulation play out in real time. The procedural vote failure highlighted in the video is classic political maneuvering. While it causes short-term market jitters, it doesn't necessarily mean the bills are dead. The bigger picture is that these discussions are happening at all, with significant political figures from both sides getting involved. The path to clear regulation in the U.S. was never going to be a straight line, and these kinds of bumps are part of the territory. On the altcoin side, the direct link between Bitcoin's price and a specific geopolitical deal involving Nvidia and China shows how mature the market is becoming. Narratives are no longer just about vague partnerships. They're tied to tangible, real-world corporate and political events that have immediate financial implications. In the latest video from Crypto Rover, the host gives a detailed breakdown of the 5 best non-KYC crypto exchanges. After personally analyzing over 20 platforms, he created an interactive dashboard to compare them on security, fees, liquidity, and coin selection. He starts by explaining that non-KYC exchanges let you trade privately with just an email, unlike KYC platforms that require ID and report your activity to governments. The video does a solid job of laying out the practical differences between these non-KYC platforms, especially the fee structures and coin availability. In my opinion, the discussion around security is the most significant part. The host's pick, WEX, gets a lot of credibility from its association with Bybit, but that can also be a point of concern. The regulatory environment for crypto is constantly tightening, and major platforms like Bybit often find themselves in the crosshairs. A crackdown on a parent company could easily create problems for its affiliates. This reinforces the host's final and most important piece of advice: self-custody is king. Using these exchanges for their intended purpose, trading, while keeping the bulk of your assets in a wallet you control, seems like the only sensible strategy in today's uncertain market. The convenience of non-KYC is tempting, but it always comes with a trade-off. In the latest video from Lark Davis, he kicks things off with the wild rumors swirling around Fed Chair Jerome Powell, who might be resigning or getting fired. If that happens, his replacement would almost certainly lower interest rates, which could be great for crypto. But Lark also points out that big market runs can happen even with high rates. It's interesting how much market movement hangs on the words and rumored actions of one person like Jerome Powell. While the idea of him being fired seems more like political theater than a real possibility, the underlying pressure to cut rates is undeniable, especially in an election year. This creates a tense but potentially explosive backdrop for assets like crypto. The video's focus on the Ethereum mindshare surge is particularly timely. For a while, it felt like Bitcoin was the only story, but with the recent ETF developments and strong on-chain activity, Ethereum is clearly forcing its way back into the spotlight. It feels less like a competition and more like a validation that institutional interest is broadening beyond just Bitcoin, which could set the stage for the next major leg up across the market. In the latest video from Coin Bureau, the host compares Ethereum and Solana to figure out which one might lead the charge in the next altcoin season. Both coins have taken a beating recently, but are showing signs of a strong recovery. The video does a great job laying out the current competitive landscape between Ethereum and Solana. My personal take is that the narrative is shifting slightly. Solana's main selling points have always been its speed and low cost, but recent network congestion issues have shown that it's not immune to growing pains. This could make some larger players hesitate. Meanwhile, Ethereum's Dinkin upgrade has made its Layer 2 network significantly cheaper, directly challenging Solana's fee advantage. While the video correctly points out Ethereum's fragmentation issue, the ecosystem is slowly becoming easier to navigate with better wallet and bridge technology. I think Ethereum's proven security and the maturation of its scaling solutions give it a more solid foundation for institutional products like tokenized assets, which seem to have more long-term value than the meme coin trading that currently dominates Solana. The race is definitely tighter, but Ethereum's slow and steady improvements might give it the edge over the long haul. In the latest video from Crypto's Russ, the host talks about the recent House vote that decided not to move forward with a vote on 3 crypto bills. He explains that this isn't a final rejection, but just a procedural delay, something that happens all the time in politics. He notes that while Trump was urging Republicans to vote yes, the measure was narrowly defeated. The host believes the resulting market dip, which saw Bitcoin briefly touch $116,000 before bouncing back to $118,000, wasn't caused by the news. Instead, he thinks it was just market makers clearing out over-leveraged positions. The real story, he argues, is the massive institutional buying happening behind the scenes. He points out that Michael Saylor's MicroStrategy now holds 3% of the entire future supply of Bitcoin. More surprisingly, Vanguard has doubled its holdings in MicroStrategy, becoming its largest shareholder with an 8% stake. This is seen as Vanguard's way of getting Bitcoin exposure while publicly avoiding it. He says that big players like BlackRock and Fidelity are also accumulating as much Bitcoin as they can. He feels this institutional demand makes Bitcoin a pretty sure thing for at least a 2x return this cycle. He also gives a quick update on altcoins like SU, which is now over $4. And say, noting that while they're hot, it might not be the real altcoin season just yet. The video does a great job of cutting through the short-term noise of political drama to focus on a much larger trend. The point about Vanguard becoming the top shareholder of MicroStrategy is particularly sharp. It's a classic case of watching what the big institutions do, not just what they say. While Vanguard has maintained a publicly cautious, even dismissive stance on offering direct crypto products like a spot ETF, their massive growing position in a company whose fate is tied to Bitcoin tells a different story. It suggests they're not willing to miss out on the upside, even if they have to get their exposure indirectly through equities. This kind of indirect participation by a financial giant is a strong signal about where the smart money believes long-term value lies, regardless of the daily political theater or market swings. In the latest video from Crypto Wendy, she talks about the newly announced California Breakthrough Project. This initiative is a partnership between California's Governor Gavin Newsom and crypto companies like Ripple, Coinbase, and Monet. Their first meeting was on June 6th at Ripple's headquarters. The project's official goal is to make government more efficient and transparent by working with tech leaders. While this might sound good on paper, the host is very doubtful. She points out that Governor Newsom doesn't have a great track record in California. The host's distrust of this partnership is pretty common among those who have been in the crypto space for a while. It's easy to be wary when politicians who have been openly hostile or ineffective suddenly want to collaborate. However, these public-private partnerships are becoming a necessary part of the industry's maturation. For companies like Ripple and Coinbase, getting a seat at the table with a major state government, regardless of the governor's reputation, is a significant strategic win. It's less about trusting the individual politicians and more about embedding their technology and perspective into the governmental framework. It's a move to influence policy from the inside, which is often more effective than shouting from the outside. The real measure of success won't be the initial announcement, but whether any real functional pilot programs emerge from this collaboration. In the latest video from The Modern Investor, there's a different, more optimistic energy in the crypto world. People are starting to believe that $250,000 Bitcoin could finally be on the horizon. For that to really kick off, Bitcoin's market dominance would need to dip, allowing altcoins to have their moment. It's my opinion that the host really nails the current feeling in the market. The contrast between massive institutional buying, like BlackRock's incredible 700,000 plus Bitcoin holding, and the relative quiet from everyday investors is stark. It feels like the groundwork is being laid for something big, but the party hasn't started for everyone yet. The Ripple Treasury discussion seems like a perfect example of the crypto community's tendency to create narratives. The host's frustration is understandable. The fundamentals of what Ripple is doing haven't changed. just the buzzwords people want to apply to it. Similarly, the NFT comeback feels different this time. It's less about hype for random art and more about established brands and platforms like OpenSea trying to build real, lasting infrastructure, which suggests a more mature market. In the latest video from the Crypto Jeb channel, the focus is on a critical pattern forming on Bitcoin's short-term chart. Jeb explains that Bitcoin is currently in a rising wedge, a pattern that usually breaks to the downside about 70% of the time. This puts Bitcoin at a major decision point that he believes will play out in the next 24 hours. It's interesting to see this breakdown because the general idea of a market at a crossroads is very much alive right now, even if the price numbers in the video seem unusually high for the present market. Currently, Bitcoin is consolidating and the community is similarly split. You have people pointing to bearish signs, like recent outflows from ETFs and a CME gap lower down the chart that is yet to be filled, which aligns with Jeb's bearish scenario. On the other hand, the bullish case he makes also resonates. The macro picture is showing signs of cooling inflation, and the long-term adoption narrative remains strong. His discussion of a cup and handle pattern is something bulls are always looking for as a sign of continuation. The video perfectly captures the current tug of war between short-term distribution fears and long-term accumulation hope that defines Bitcoin's price action at the moment.